Brian Cheung is with us to talk about the details of that CPI number. Brian, we all knew, right, that we were going to see a big year-over-year increase because of how depressed inflation was last year. But, much like Friday, this is another big surprise.
Yeah, well, it's not normal that people care this much about inflation data, which is a big day for me. But of course, a lot of headline attention on this because of just the inflationary worries. But let's unpack what we got from the Bureau of Labor Statistics this morning. Again, the report for April saying that prices rose 0.8%. That was above the expectations of 0.2%. Again, this is the CPI data print, which is different than the PCE. But year over year, that meant that prices at least on this index rose 4.2% above the street's estimates of 3.6%. But what you really want to watch for is the CPI print that strips out those volatile food and energy components. And when you look at that so-called core CPI, figures are up 3% year over year, much above the expected figure of 2.3%. Now, what's interesting is that the month over month change for core CPI at 0.9%, that's the highest, by the way, since April 1982. And one reason is because of used car and truck prices. Take a look at that, 10% rising prices in that category month over month and 21% year over year. And of course, we've been hearing anecdotally about how expensive it's been to purchase a car right now. And a number of other reflationary trade data points as well in the CPI report that kind of point to the underlying dynamics here. When you look at airline fares, for example, up 10%, which means that as this economy is reopening, you're seeing maybe some of that demand pull pressure on inflation. But of course, how much of this is transitory because of supply chain issues? When you think about some of those manufacturing, specifically technology companies, that's also a big part of those rising car prices. Those are all things that are going to be interesting to watch in the coming months as the Federal Reserve and other officials say maybe some of those price pressures will alleviate. Not sure right now, but at least for the April print, definitely prices rising faster than some had expected.
And Brian, part of the reason, or I guess the reason that people are so focused on this morning's inflation report is because of what it means for the Fed. Fed Vice Chair Rich Clarida just out in the last couple of minutes on the tape with his latest comments on the state of the economy, pretty much what we would expect from a Fed official as far as how he sees the inflation outlook here.
Yeah, well, let's break down some of these headlines again. This just crossing. He's making a speech at the National Association of Business Economics. Some of the headlines: inflation, quote, likely to rise somewhat further before moderating later this year, adding that, quote, one-time increases in prices are likely to have only transitory effects on underlying inflation. And guys, this is exactly what we've heard from other Fed officials, including on this program. We heard the same thing from the likes of San Francisco Fed President Mary Daly, in addition to Cleveland Fed President Loretta Mester, saying that another big component of this is also just the measuring effects, right? When you try to compare April 2021 to April 2020, well, March and April 2020 saw a lot of price declines. So, of course, inflation is going to look a lot larger when you look at those year-over-year comparisons. But, guys, this just underscores how challenging this is going to be for the Federal Reserve, because when you think about inflation expectations, a lot of that is likely factored into people watching programs like us, watching the news headlines on Twitter, taking a look at, what is the inflation data? And when you have so many people freaking out about one data point, even when the Fed is saying don't pay attention to one data point, this could feed into inflation expectations rising and maybe actual inflation at one point rising. So you could see the feedback loop, and it underscores the communication challenge despite many, many months and weeks of Fed officials saying don't pay attention to just one CPI print. Well, seems like a lot of people very sensitive to this one in particular. We'll see how markets react. But again, underscoring the challenge that the Federal Reserve has in the months ahead.
Yes, most definitely. And especially the challenge of the problem with transitory is we won't know for a while if it's transitory or not. We got to wait and see if these numbers stick around. Thanks so much, Brian. Appreciate it.